and asking the question whether gold has a limit. Obviously, we've seen gold prices rise very high, but I wanted to discuss the idea that what is the kind of benchmark, what should gold be valued at, and is there a limit or how high it can go? So the way to think about this is that we should look at the historical significance of gold, and we see that it's historically been used as a currency. In the olden days, it was actually people traded with gold coins. And then after that, people, had currency, paper currency, but that was always backed by the value of gold. So the idea of gold being a commodity is a relatively new phenomenon, only since the 1970s. And in reality, it still today behaves very much like a currency does. The way it tends to go up when more money is printed more or less implies that it functions like a currency more than anything else. In fact, most of the gold that's invested in is stored in vaults underground rather than used as other commodities are in industrial production, which just tells you that it's used as a store of value more than anything else. So if we think about how any asset should be valued, if we take a stock, for example, we would look at a stock and we would look at the future cash flows that would come out of investing in that stock. So when you buy a stock, you get dividends. Stock price also goes up, so you get capital gains. And the reason that happens is because the company that you've purchased the stock of is generating profits, generating revenues, and that's driving the rises in the stock price. So when we buy a stock, it has a kind of fundamental value, which is determined by its future earnings. Obviously, we don't know what its future earnings will be, but we can make an estimate, and people make different estimates of what these are, and then we come up with a value that what we think the stock is worth. Similarly, even commodities, for example, like oil, which don't necessarily generate cash flow themselves, but certainly have a value because they are used in producing something else, which does generate a cash flow. So, if in the manufacturing process, if you're making steel, for example, you use a lot of energy, and then the steel will sell for something else. So there will be a relationship between what that final good is sold for and what the price of the input oil is. So, but if we look at gold, it's very different because, like I said, gold is mostly stored underground in vaults and isn't really used to produce anything. I mean, the only thing it's used to produce is jewelry. But generally, jewelry demand is not going to be very large. Doesn't account for much of the gold purchases and sales in the actual market. It accounts for a very small fraction. So because of the fact that it doesn't really have, a sort of value in the same way that a stock does or other commodities do, it's very difficult to put a fundamental value on gold. It's very difficult to say that, gold is worth X and therefore it's undervalued or therefore it's overvalued. So because of this, gold, it's very hard as well to put a limit on gold and say how high the price can go. I would not be surprised if we see gold at $2,000, $4,000, even $10,000, in the many years ahead. It's because it doesn't. There's no real reference point. We don't know what gold should be worth in the same way that we do for other commodities and stocks. So in that sense, gold, in my opinion, doesn't really have any limits, and that applies limit up or limit down as well, because there's no reason why gold can fall in the same way that it can rise. And it's essentially a case of it will have value as long as other people are willing to pay for it as well.